Hello, welcome to FreeFX. This is video 140. I'm Francesco. Welcome. Today is Saturday, the 29th of October. We had an extraordinary week. I'm going to start with this, which is the SPX chart on the monthly. And you can see there's a lot to talk about because next week is the Fed rate decision. What we had this week is earnings from one of the biggest companies, and that's Google. We also had earnings from another very big company, Amazon, and yet another tech giant, Apple. We've also had Facebook or Metaverse, and obviously this has had an impact on price. But the main conversation really has to be for me what happens next, because the week as it is has kind of brought some volatility, but ultimately we had an extraordinary turn of events. So if we look at the daily here, you can see that just at the close of business yesterday, we rallied an extraordinary amount, just finishing the week after a very tricky start with the giants reporting some not so positive earnings, Amazon especially, and Google and Facebook. So that said, we had the sort of midweek stall and big reverse there, red candle volume, and then the rally here. This is the futures chart, but let's kind of come back to this in a second because I want to show you really what's happening in the broader term. For the monthly, we can see there's lots of levels. I've drawn a line, support and resistance from May, June and September. And this is quite important because if I just hide the 10-year yield there, we can see that the price levels have, in a way, reached this level. This level is quite important. If we look at something like the weekly, you might see a little bit better. So we're just right up against that, and you can see back here in May and June we had just a candle from that point to this is the June lows. 16th of June we reached this point here, 3660 basically, and then we reversed. So as we remember, June and July basically were 2 months that kind of cancelled each other out. So if we go back to the monthly, you'll see that very clearly. We had these 2 months kind of like a reversal, full reversal of the losses in June. And we're sort of seeing something similar with the current month candle, although we had a much bigger wick here than we had back in June. But certainly this kind of solid, almost solid candle is proving to be quite a contender for price reversals. And back to the actually I'm just going to stay with this, the CCI. It's very interesting. Let's look at the CCI because I've again put out a line level here, and this is kind of like the line in the sand, because we've really just kind of got to this point now where we haven't had a sort of a V bottom of the pandemic crash, but in 2020, but we certainly have a steep decline, and then we had to sort of see what happens in the following month. If we look back to 2016 when we had a pullback, there was a steep curve again down to these levels, minus 120 something. This is 130 actually, so we're basically aiming for that. And the last time we actually went below that level was in the 2008, and that sort of happened in the latter stages, sort of November. We actually before that it was August, etc. So we certainly have some kind of potential to, as we all know, that 2008 was a great lesson in what happens not just sort of fundamentally but technically when there's complacency, and how long that can last. You know, it can last quite a long time. I mean, the shape of that on the monthly, you can see from June onwards, was slightly different. It was more of a, there was a big pullback here in November, big long wick, and in October. So there's a sort of similarity in a way that there was an attempt at retreating, and there's a really interesting candle if you look closely, and that's the December candle. It's almost, well, it's doji really, so almost like a sign from November that the bottom was in. And you hear this conversation all the time on if you're on Twitter like me, and just generally around the market having bottomed, and this sort of has been the talk since the bear market rally. that we've had back in July, August. That the bottom was in, you saw this CCI reversing, and people were sort of obviously very aware that this was a possibility, but then we sort of had more losses. And when I say losses, I mean that it's actually gains if you're shorting. So I shouldn't call it losses, I should say move down. Let's call it a move down. So that means that it is uncertain as to where we'll go next. Certainly we've had this pre-pandemic level, just high there back in February 2020. We were getting within reach of that. You can see the wick here from this month, October, and I've pointed that out in previous videos. So for me, that's the target at the moment. Also brought out an interesting statistic yesterday on Twitter, which was that on the options heat map, there are a lot of shorts at I think it's 3,750, and lots of longs at 3,980. Like the biggest open interest change currently in the E-mini futures contracts is for calls at 3,980, 3,990, and shorts at 3,750. That's changed from just a few days ago when the range was much broader. It was like over 400 points between the highest calls area and the lowest call area. So it's kind of narrowed to something at 200 and something points. So there's more concentration in terms of the collaring of price around calls and puts around current price. So that's interesting as well. But the 3,750 would be essentially 3,750 is not far on monthly chart. It would be on a daily chart, but it puts us not far at all from where we currently are. So that is also something that we should think about, sort of expectations of market, but also hedging and going into next week. We've got a lot of event. Obviously, the Fed rate decision is the biggest single market mover potentially, so we have to think about that as well. Just briefly, because I've mentioned that the futures chart, but just before we head into that, we saw what happened back in July when we ended the rally. I think the rally ended at the 21 moving average for the monthly chart, this one here. And if I just bring it up to maybe I'll just move that a little bit. I'll put it to the center so you can see a bit better. So the 21 weighted moving average on the monthly chart was here, and we ended the rally. But before that, we had a divergence on the CCI. You can see that it started kind of here. These two humps were quite close together, and price kept rallying up. But really, the negative move was from the 29th of July to the 16th of August. Okay, so that's not quite a full month, 3 weeks, or 2.5 weeks. And but you can see that more clearly if you go to the 4-hour, because you have basically we've had a lot of negative divergence. And the last one that I keep kind of referring back to is the one from the 6th to the 13th of September. And that's kind of where we got to the CPI release, which was hotter than expected. And then we had this broader move. And ever since, what we've had is attempts to cancel that move. You can see where we got to now. And that's the June-July resistance, which was support in May and June and September. So we're back below that. Now it's resistance, June-July, and we're attempting to sort of push against that. We just peaked above it, but we got to allow for a couple of points. So, but what's happened here is that we've got several divergences kind of ongoing. This one was resolved. This one sort of was resolved, and this one hasn't been resolved. So the divergence that we see from the 23rd of October to the 27th, so essentially most of last week, resulted in this pullback, but it wasn't deep enough. So truly to see divergence, negative divergence that means something, you'd have to at least see price go below the previous level. And we've not really seen that in the last few attempts. This one kind of resulted in price being higher and lower highs and higher highs. So it's almost like a mini uptrend, but it's been quite challenging for me to trade this. I mean, these are kind of my trades. As you can see, these two I got margin called, so I tried to manage them actually, so I took a small loss there. And I was just trying to partially close these, but unfortunately that's what happens. So I'm clawing my way back, so it's a difficult thing to do. I've shorted again, so I'm just having to see how this goes, managing that trade as well carefully. On the future side, just briefly keep this video nice and short. What we've got is just two things. Okay, so if you're not familiar with these indicators, the ADX, so what you have is a directional index, and usually what you get is the positive, DI plus, and negative, but they indicate the strength of up moves and the strength of down moves within the same chart. If you combine them and you pull an average, you get the average directional index, ADX. And what it tells you is not uptrend or downtrend, is the strength of movement. It's kind of like a momentum indicator. So as you can see, we had a lot of strength going into the down moves from September onwards, and we've not really had. So the peak was about here when we got to the bottom, 17th of October, and it's actually been declining. So this rally has been showing a decline in the ADX. This is set to 21 periods. So from essentially it's kind of plateaued at 17th of October. So we're looking at kind of like almost 2 weeks of it plateauing and declining. So we've got a divergence between these two. The other thing is the OBV, on balance volume. Again, this has been struggling to pick up. We had sort of very, very strong down moves, again, September, etc. Very strong. And then we sort of bottomed out in early October, kind of similar to the ADX, and it hasn't really picked up. We could provide a sort of, you can see that I'm sort of pushing the, what we might call it, a bearish narrative, but for balance really, I think I should provide a bit of counter sort of argument and say that the advanced decline line has actually been behaving rather differently. As you can see, it's been picking up. The advanced decline line is number of stocks advancing minus number of stocks declining. So you can see that when we had a strong push down, that was quite clearly a declining line. We picked up during the so-called bear market rally and started declining again. So this is more responsive, obviously, to the changes, and more susceptible to, providing a clearer narrative, if you like, and the response to rise. But that's kind of one that I've kept an eye on because it's been quite choppy around middle of October. So now it sort of seems to have some clarity. Again, we need to see some leverage on that. So still a little bit early days, but that's kind of where we're at. So next week we've got the Fed rate decision. I've covered that before, so I'm not going to go into that. And it means essentially that the 75 basis points is pretty much a given, high percentage of that probability. So what that means for the markets, I mean, there won't be a full statement because it's not a quarterly event, so there won't be projections and all that, dot plots, etc. But there might be a short press conference. I think it'd be interesting to see also the Fed minutes as well following. But there's sort of, this has kind of been talked about as being perhaps a sign of systematic trading, basically algos, etc., and pushing this price up in the absence of something. I'm not sure what that something is. The Fed sort of the Fed bodyguards, stepping in, because we've had no Fed speakers this week. So in the absence of any sort of obvious narrative being pushed by the Fed, but ultimately this could be called a pointless exercise because short-term gain versus potentially bigger flushing of whatever. So I'm not sure. Also, we pushed to the CCI on the 4-hour 200 positive, and this is usually a sign of a upcoming pullback. So I'm sort of really just curious to see what happens, not just to my position, but really to price at this point. Generally speaking, a positive 200 is a sign of reversal on the 4 hours. So on the daily as well, just to kind of finish on that note, we have come almost to the positive 200. And generally speaking, again, this is a bit of an extreme, but unless you're in a very strong kind of momentum, as you can see that, but then we get negative divergence sometimes not. But you can see here as well other examples, December, and then a pullback in price. So I think it's a crucial point we're going to. Could be a few days, a few hours, hard to say. But November the 2nd November is coming up, so that's only 3 days away. So, well, I'm going to finish there and have a great Halloween if you're celebrating, and see you next week for potentially a fantastic week for traders. Take care. Bye.